Today, I want to talk about how Citadel has just posted record losses. I want to explain why they're losing money, how they're losing so much money, and how they're in big trouble. So stay tuned and let's make some money. Now to dive straight in with the key information. So, Unusual was tweeted saying Citadel Securities had their first half trading revenue fall over 35% so far, and profits were down nearly 60% in the first half of the year. Citadel is coming off the back of record-breaking profits in 2022. How is their revenue fallen so significantly and profits nearly been wiped out when the market is up 20% so far this year? All they had to do was buy anything related to tech and they would have been up 100% profit, unless they're irresponsibly short somewhere. Citadel could have bought any tech stock in the entire market and would have at least doubled their entire portfolio so far in the first 6 months of this year. But instead, revenues have fallen 35% and profits are down 60%, nearly being wiped out. Clearly, Citadel had their trading plan massively wrong for this year and have been hemorrhaging money. This reminds me of the scene in the film The Big Short where Michael Burry says that it looks like the collapse of the financial sector is imminent. I start to sell my position. It's 1.3 billion. Sure, I'll hold. If Citadel continues these losses for the remainder of this year, it won't be long until retail investors like you and I are having the exact same conversation, selling our AMC shares. We'll be saying I start to sell my AMC position. It's worth $1.3 billion. Sure, I'll hold. Bigham's even posted the article from Bloomberg that says Citadel Securities trading revenue slides 35% on muted market. As I said, this is really interesting because the market has not been muted, as the S&P 500 is already up over 20% so far this year. And we've got numerous tech stocks up over 100%, over 300%, and over 1,000%. Citadel could have just bet their entire portfolio on Carvana and would have 10 times their entire $400 billion portfolio. Now obviously there's some slight sarcasm there as the Carvana market cap is only a few $billion. So if Citadel spent $400 billion buying shares, they'd buy the entire float like 100 times over. But still, all Citadel had to do was put their entire portfolio into tech stocks and they would have doubled their entire fund. But yet revenues have slid 35% and profits are down over 60%. Citadel only generated $2.7 billion in revenue in the first 6 months of this year, compared to last year where they generated $4.2 billion. I wonder if Citadel did actually generate something like $6 or $7 billion in fee revenues, but had to offset that with $4 or $5 billion in fee losses. And obviously a representative for Citadel Securities, which has offices in Miami, New York and Chicago, declined to comment on its recent performance. And interestingly, it says the new figures were disclosed as part of an ongoing loan refinancing the company is marketing to debt investors. So it seems Citadel is marketing some kind of new loan, clearly as they're desperate to take on more cash. So we've got Citadel's revenues and profits falling, and Citadel being desperate for more cash, taking on new loans. This to me sounds a bit like a Citadel bailout, and that a potential collapse of Citadel may be imminent. Especially if they can't raise this debt financing, it's likely Citadel could indeed run out of cash. And speaking of that loan, it says the firm originally launched a repricing on an existing $600 million leveraged loan earlier this month. But it relaunched the deal as a new $3.5 billion loan to rework its existing debts. So Citadel was just going to reborrow the $600 million, but decided to increase that desperately to $3.5 billion. And that is why Citadel Securities is rated the lowest rung of investment grade. And the reason why Citadel is likely panicking is because AMC just saw its highest volume day since 2021. Yesterday, over 256 million AMC shares were traded. Back in March of 2022, we only saw 226 million. Back in August of 2021, we only saw 228 million. We haven't traded this many shares since June of 2021. Even in August 2022 and March of 2023 and any other months where AMC saw a run-up. Clearly the shorts are in big trouble as hundreds of millions of shares traded hands in one singular day. As Stonks Batman tweeted, he said today AMC traded over 200 million shares of volume as of 1:53 in the afternoon. He said the float size, importantly, is still 516 million shares. The average volume for AMC over the last few weeks and few months has only been about 20 million shares. AMC traded 10 times its usual daily volume, over a third of the float in one singular day. I think it's important to remember we're just talking about AMC here, not talking about AMC and Ape combined. AMC's float has not changed since 2021, and we just saw 200 million shares of volume. As I said, this is the highest amount of volume we've seen in the last 2 years, which shows shorts are panicking and are losing control. On top of that, this tweet says that people are asking me about the erratic price action in AMC after hours. It says you're seeing the bogus out of sequence trades that I showed in my videos last week. It should be criminal. He said they hid all of those trades above $7 per share and held them until the after hours, so they didn't need to print the trades on the tape and on the charts. You can see this level 2 where tons and tons of trades are going through at $7, $5, $6, $7 and over again. As you can see, the majority of these trades are odd lot retail investor purchases, which have obviously been purchased during those market hours, but the orders have been held back until the after hours. Again, this is because the shorts were so scared of so much volume going through AMC during those trading hours. So they try to delay as many trades as possible, not putting the order through during the day and putting it through in the after hours. This way the trade barely impacts the AMC price and obviously does not push the AMC price higher, but those hedge funds and market makers can still short sell shares during the day to try and push the price down. Obviously we know by now this is absolutely criminal, and this is something they've also been doing over the last 2 years, if not longer. But again, it just frustrates me these shorts and these market makers can continue getting away with delaying retail investor orders. But again, it shows just how scared these shorts actually are, the fact they're having to delay so many orders above $7 per share. And that's why Gollum Stock's tweet is saying, attention AMC buyers. Buy your shares if you are buying AMC shares, which obviously I can't tell you to buy or sell shares. But if you are buying shares, buy those shares in amounts of 100 shares only. If it's not in multiples of 100 shares, it's considered an odd lot and will be routed through the dark pools in the after hours. And also, please don't use payment for order flow apps like Robinhood or Webull, as those also go through dark pools as well. Investopedia says that odd lot trades are trade orders made by investors that include less than 100 shares in a transaction, or are not multiples of 100. These trade orders generally encompass individual investors that the theory believes are less educated and influential on the market overall. And obviously, because these odd lot trades are supposed to have less impact on the overall market, those orders can be delayed and put through in the after hours. Which is why he says if you are buying shares, try and buy them in round lots. That way it will impact on the AMC price. And Sam has also said that AMC is breaking out of the ape arbitrage. He said if AMC can break out of the arbitrage entirely, this thing can easily see the teens again. Basically saying if AMC's price continues to move upwards, opposite to the way these hedge funds expect AMC to move, AMC could easily run up again into the teens, 20s and 30s, if not higher. Because obviously all these shorts are betting AMC will fall. The legal short sellers, the illegal short sellers, and the arbitrage short sellers. And obviously if AMC continues moving upwards, both the arbitrage short sellers and the legal short sellers will be forced to close out of their positions, being squeezed. And obviously if all these guys end up being squeezed, AMC will run to $30, $40 or $50 per share and above, squeezing those illegal short sellers. And obviously once those illegal short sellers are squeezed too, as they're the largest, AMC's price will run into the thousands. But guys, be sure to let me know what you think down in the comments below. And as always guys, be sure to ding that notification bell, because that way you'll be alerted when I put a new video. Cheers.